I bid you all good morning, good evening, and good night, wherever you may be watching this transmission, guys. Thanks for tuning in, subscribing, and sharing the videos. Okay, man, I got a really good, important GDP video coming out of Canada showing the GDP growth. And this is very important, especially if you're following the housing markets all over the Commonwealth like I have for the last decade. This one's kind of important, so let's take a look at this one, okay? Don't forget, guys, to subscribe to the channel, be part of the channel, be part of the group, be part of our call-in shows, be part of lots going on. So we got trends in the housing market this Wednesday coming up. And don't forget to follow us also on Mike in the Night, where we get call-ins from all over the world discussing topics that are basically hitting our doorsteps. It's coming home, people. The problems are coming home. So let's discuss those topics and talk ourselves through this. All right, so let's get to some article reading here. Here it is, guys, from our friends over at Better Dwelling. Now, the problem is our housing market has not been set on autopilot. Usually, when you get a bunch of job losses and millions of people unemployed because of this sickness that's going around, you would see the housing market follow real quickly, because that's just what happens in an economy that is set to autopilot. Now, but unfortunately, we haven't been set to autopilot since the 2010 Olympics here in Canada in Vancouver. We basically watched the 2008 crash in the United States. The whole Commonwealth watched the crash, and seeing Americans lose a lot. And real estate, housing, of course, was one of the big factors in it. But unfortunately, in the Commonwealth, we just watched that crash. And our countries like Australia, Canada, the UK, they jumped in, lowered rates to record lows, and started throwing in a bit of money here and there just to keep the economy afloat while America gets itself back on its feet. And man, was that ever a mistake that they did, because the people that were bought out of the markets back then are still bought out of the markets 10 and 15 years later in the Commonwealth. So here it is, guys. Let's get back here. Canada's GDP growth is flat, but real estate outperforms. Canadian economy has been leaning more and more on real estate these days. It always has, since 2010. And the graph is going to show you there. The graph that they put in here is real good. StatsCan data shows gross domestic product GDP was flat in February. Despite the flat growth, real estate advanced and significantly outperformed the general economy. Who cares about February? We know February's like a totally forever ago and basically in a different universe. Even more so, it feels like they delayed pictures since we're receiving partial updates for March already. Guys, you need a couple of months on the GDP reports and stuff because the lag, there's a couple of months lag with that, so it's kind of hard. And it's all propped too. It's all Mickey Moused. It's all propped, right? Well, that's not entirely true. If you're looking for an accurate picture of how the markets are moving, GDP numbers take around 2 months. There you go, to fully compile. I thought it was 3 or 4, but that's okay. The snapshots StatsCan gave for March is incomplete and will change as they dive deeper into the numbers. If you want a complete look by industry, you'll need to look at the full GDP numbers. Now, those numbers were totally different market, but you need a baseline. If you're in the team V-shape, good luck, V-shape recovery. Woo! You have no idea what the beginning of the V looks like. If you skip the data, if you're a U-shape recovery, look those two terms up, V-shape and U-shape, and kind of give you a little bit of indication of what they're talking about. You will still need to know how things were before they can drop. In other words, February's economy is where the government is trying to get people back to. So yes, it is important, even if your cousin Jeff thinks the world is run by lizard people. Thinks it isn't. I love Better Dwelling. Canada's GDP is flat from a month before. Growth was flat from the month before, but up significantly from a year before that. Kind of real GDP was flat in February from the month before compared to the same month last year. It was up 2.1%, which seemed huge until you realize the comparison period is skewed, since last February had an unusual decline despite relatively decent growth last year. The first quarter was a bit of a slump. This helps last month look like it had much more impressive growth than it did. So now, this is the meat and potatoes right here. This graph. Holy smokes. Let me zoom this out so you guys can actually see this properly. Let me zoom that out again one more time. There it is right there. Look at that. So the red line represents real estate and leasing. Like, there it is. And the country's GDP. So I think Canada's housing bubble is bigger than Germany's economy by a lot. I think it's bigger than, it's so big that the Canadian housing bubble, I'm willing to put that on record and put a stamp on it. I think it's bigger than Germany's economy, just the Canadian housing market. I honestly, wholeheartedly think so. And I'll show you why. Real estate outpaces general economic growth. The real estate sector is still one of the fastest growing parts of the economy. Woo! Why? Here it goes. Again, from our friends are better dwelling. Canada would be in a recession without money laundering. Again, why? Because our markets are not set to autopilot. Oh, I want to go back here and show you this graph. There it is, 2007, 2008, right there. Let me zoom that in. Look at that right there. Look at that. There's the GDP, or Canada's GDP numbers, a negative 4.38, detraction or retraction in growth. And look at our real estate. That's the proof right there. The proof is in the pudding, and I'm going to show you, and I'm going to prove it to you right here. Canada would be in a recession without money laundering. And unfortunately, I can't find anything newer, but this is from 2011 to 2015. They estimate roughly $200 billion, and that was all thrown into Canadian real estate. There it is there by province, how much was thrown in by $200 billion from 2011 to 2015. And a lot of it is just Chinese trying to park their money and get it out of China. And they're tired of the CCP, and they want to park their money. They've been doing it in California for a long time. Since the early 90s, they've been doing it in California a lot. And it's gotten so bad there that the locals cannot even get into a one-bedroom property there if they're like a plastic surgeon. It's so hard to get into anything there in California without going broke. So that's what's happening. Canada's economy has been binging off foreign money, and that's been a huge, huge issue for Canada because the locals just can't compete with dirty money. So real estate outpaces general economic growth. The real estate sector is still one of the fastest growing parts of the economy. The real estate rental and leasing portion of the GDP grew 0.5% in February from a month before. This is an increase of 5.9% from the same month last year. This was the sixth largest growth for any segment in the month for both the monthly and annual increase. So here is the real estate rental and leasing as percentage of GDP. Look at that. It's a huge percentage. I think these are skewed. I don't think it's 13%. I think it's like 26, 30, 40%. I think it's a crazy, crazy astronomical number that somebody will put me in a loony bin if I mention those numbers on here. But I think it's even more. When you got $200 billion laundered, brought into a country and basically impoverishing the country's own middle class, that's a lot of cash coming in. This is what they estimate. It could be $400 billion. Man, if we add the other 5 years, because this is only up until 2015, if we add 5 more years to 2020, and let's say you add another $200 billion, that's $400 billion. That's $500 billion. That's a lot of money. So, the increase was large, but the comparison period was a bit of an anomaly. The 12-month increase is the largest uptick since December 2017, comparing it to February 2019. So, why did we see a downturn in early 2019, late 2018, early 2019 in Canadian real estate? We saw somewhat of a downturn. We saw it in Australia. We saw it in New Zealand. We saw it in the UK. And it kind of plateaued through 2019, and you started seeing some gains. Well, I'll tell you why. The Chinese government put a lot of implementations into place to stop people from bringing money out of the country. So to keep China's wealth in the country, and now with things opening up and people finding loopholes and ways to get their money out of China, it's going to be really tough for the Westerners to keep up with. So I think things might get a lot worse if our governments keep bringing in more money, right? So we get the same issue as the general economy, where even StatCan noted it was the first decline in a year. A similar trend is seen in a number of other indicators since Q1 of 2017 and 2018 were usually weak for real estate. The Canadian economy was slowing before the pandemic, and most projections show that. As it slowed, the real estate continued to do the heavy lifting, helping to prevent the negative print in February. The percent of the economy attributed to the real estate, rental, and leasing is now the highest since 2016. So this is from our friends over at Better Dwelling. Guys, go check out their website and sign up for the newsletter. These guys are really good at actually talking the talk on what's happening. And this is the problem, guys. This is the problem we're facing now. We are facing this problem where the Commonwealth, the middle class, has been completely bought out. I remember when these new towers were being built in downtown Vancouver. I still remember in like 2016, I wanted to go visit one of the showrooms to see what they look like. I was looking at something for me, maybe to, I wanted to raise a family, but, it was just out of reach for many reasons. You know what I'm saying? Not just financial, but just the bang for your buck is just not there, right? So I went ahead and I wanted to go look at the showrooms. They're like, oh, no, we don't have a showroom in Canada for these new condo builds. They're not in Canada. I don't understand. Oh, you have to go to Shanghai because we're going to be unveiling the new condos and the builds, and people are going to start basically buying up units. But the problem is we're going to be revealing it or showing it in Shanghai. But what about people in Canada? What about people in Canada? She said to me, and then hung up the phone. It's like, holy smokes. So I get stories from a lot of people now lately sending me stories and telling me, hey, Mike, remember you brought up that story about some guy that owns like 100 properties in Canada and he's never been to Canada? Well, apparently there's this one guy, okay, who lives in Hong Kong that owns close to 120 to 150 condos in Sydney, Australia, okay? And he's never been to Australia. That's another email I got from somebody that knows somebody and can confirm that person legitimately. And he brags about how he's never been to Australia. Yeah. That's scary stuff. So when we sell out to the highest bidder, you're going to have people that are going to want to move their money out of dictatorships, and they're going to want to park it somewhere safer. And when the locals get bought out, the locals can no longer afford to live in those locations. People move out, and homeowners get wealthy on paper overnight. Homeowners look like they're billionaires on paper, and then they start borrowing from their homes so they can keep up with the Joneses. And then companies start to fold because, one, they can't get the help they need locally because people have to commute 2 hours to get into work. And that's just how it is, and that's just how the cookie crumbles, and that's what we've been under for the last, 10, 13 years. In Australia, it's even been longer. Australia has been in a bull market for many, many years there in their housing markets. So they've done everything to prop up these markets. So this GDP, real estate and rental leasing to GDP is a clear, very, very clear message right here. And this thing won't lie. This is not a lie. This is not a lie right here. This is the truth. And I want to bring this to you guys because Canada will be in a recession if it wasn't for money laundering. Thank you so much, guys, for bringing in your money and adding it to a frail economy that was set for reset, but we kept it going for another 10, maybe 13 years we kept it going. Maybe 15 years we kept it going for people parking their money in Canada and competing for rich investors. And everybody in the Commonwealth is on the hook for this. All the countries in the Commonwealth. Our leaders sold us out, plain and simple. And if I'm wrong, go ahead, guys, and tell me in the comments how wrong I am about this. And please, we'd like to see your view on this subject. Let me know. Comment below, guys. Don't forget to share this video because none of my videos get out there. And don't forget to subscribe and be part of the channel. I really appreciate it. And if you want to support the transmission, share a video. Get this out there. Mike Martins here with the Mike Martins channel. Thanks for watching, guys.